We'll run through some S&P 500 daily charts. Everybody knows where I stand on the weekly chart. And there's a link here to the video that discusses that. Here in this daily S&P 500 chart, all of the bands. So there's the Stark band, upper 5108. Then the Bollinger band, 5088. Channel 3 high right there, 5088 also. And the conversion line bumped up. It's at 5007.35. This ongoing supply line was qualified today, so as long as it doesn't turn around and close under 5031.43 end of day tomorrow on the 23rd, it will stay qualified and possibly confirmed. It would have to open higher than this close and tick a little higher than this high and close above this close for tomorrow end of day. And do all that or some of it. We'll get a supply projection somewhere up here, target to shoot for. Things turn south tomorrow, close under this ongoing demand line, qualifies it. Same thing with this one and this one. Would have to be a drastic downdraft. And the 20 EMA in dashed blue, it's called moving average 2 here, is still underneath the 20 simple moving average. And the 50 EMA in dashed gold is just barely above the simple moving average 3, which is the 50 simple moving average, at 4839.22. So it's been going up and down above that simple moving average by some pennies the last couple of days. Right now it's above it, and that's something to keep a close watch on to see if it moves significantly under the simple moving average. And in this S&P 500 daily cloud chart, zigzag did have the swing point to the downside when the C5 was parked at this high. Now we've had it shift over, so it's going to try to seek to get to the top of the next bar here, wherever that C5 lands. And it's going to take several days, as it would need to have a higher consecutive true low. So even if it ticks lower than this low, 5038.83, but stays above this close, this is the true low for this bar, stays above this close, that would count as 2 higher lows. So then it would have 3 more days. And the zigzag pattern isn't going to be much help either, as today on the 22nd was the first day where the ATR4 was higher than the previous ATR4. And you can see the previous ATR4 before this one was a little higher, so it's like starting over to the upside, so it needs 3 more days like that, higher ATR than the previous day's ATR4. And all the trend factors moved up, 4950.80 for trend factor down 1, and the 50% and 100% momentum down bumped up. So there's the momentum down level, and here's the exhaustion levels, 50% and 100%. And there's an interesting situation for sure. It missed tagging this qualified and confirmed 100% propulsion exhaustion up by pennies today for a high 509439, and the 100% propulsion exhaustion up level is at 5094.45, again by pennies. I expect it to get tagged, but then there's this 50% disqualified propulsion exhaustion up right above the 100% at 5103.45. So that will be somewhat resistance there. Not great resistance, but nonetheless a still disqualified level to the upside right above the qualified and confirmed propulsion exhaustion up for 100%. So this could be an interesting area. Price would have some work to do to get above it, and it's had a pretty good move already. And price in the pre-market hours for the S&P 500 at 5:21 p.m. Central Time on the 22nd. In the aftermarket hours is 50.85. So a little bit of red, not bad. And I believe price will be idling, going sideways for a few days, more than likely, as next week's major U.S. economic reports has the PCE deflator for personal consumption expenditure, and the Fed really pays attention to this core PCE year over year, and we're still in the 2 handle. So it needs to stay in the 2 handle. If it gets back above 3, that could be a little bit of a problem. And here's the S&P 500 daily chart with the Andrews Pitchfork that's anchored at the former all-time intraday high in January 22. And I've been working with it, creating ad hoc tines of my own. And I've stopped. There's going to be no more movement to the next new intraday high as it went past 5%, so 5.1%. And I'm going to leave it there, and we'll just use these support levels if it ever goes down again, meaning price in the S&P 500. So that first Pitchfork level 4 up here is at 50.48.34, and then Pitchfork 3 is at 47.77.73. So it's pretty far away, 5%. And there's a new uptrend line in purple, exactly the same as all the other ones, just copied and pasted and moved over. So here's one channel that price jumped back up into, and if it falls out of that one, it'll be back in another channel. We're calling that one channel B right here. So the bottom line of channel B is at 49.60.47 right there for tomorrow. And here's an S&P 500 daily cloud chart looking back to the top of January 22. We have for sure surpassed that in price. And there's 2 parabolic lines here, and I'm using them as Gann angles as they're anchored at this low in November. We'll zoom in and take a look now. So you can see the first parabolic line here in red. That's the October low, beginning of November. And it busted out of that to the downside, and now we've created another parabolic line. Had a scare the last couple of days, and NVIDIA really made it pop back up into this ascending broadening wedge, you could almost call it. So I mean, it's just straight up catching manna from heaven. This reminds me of the free money era almost, back in the same chart here, but it's too far back to take a look, but it definitely looks the same. So it's back up into that, and the bottom line of this extreme ascending broadening wedge pattern is going to be at 50.24.33 for tomorrow on the 23rd. So it's quite extreme. Can't keep that up forever. Could have downdrafts and then keep creating Gann angle lines. We'll have to see. Right now it's like really way up there. And while price has made new all-time highs all over the place, there's still not an all-time high that would get this extreme PPO above the prior level at 13.13%. You can see it actually went a little higher than that during the free money era here, but I'm anchoring it at common points, so 13.13%, and the PPO extreme has yet to exceed that, and if it exceeds that and stays above it, then it really is like a sea change. I've heard somebody use that. I'm not familiar with it, but it's a sea change. And that's like a major paradigm shift or whatever, but a sea change if it can get above that, because then that's been busted to the upside for a new all-time high on the PPO extreme, and price has already done it. And today the Rock 1 went up into the euphoric state line, so it went past that a little bit, 2.11 to the upside. ATR2 almost hit its pain threshold, which is usually used for the downside, but it can get hit to the upside in the euphoric state. You can see back here that October-November run, it just blasted above the pain threshold for ATR2 and was way above euphoric state on the Rock 1. All the while, PPO Extreme was still in the depths of despair, but that was really the beginning of the end of that.